I know gold prices are not at $3,000 yet. This is a video I wanted to film before we got to 3,000 to give you all the exact details of why we're going to blow through 3,000, and I'm going to tell you as a bonus how long, and it's not long, how long it's going to take us to go from 3,000 to 4,000. And I always ask you early, please click like on this video. Very humbly I ask you that because it really helps us get our message out to more people like you and I. So before we get into my prediction about when we're going to get to $4,000 gold, and I'll tell you all the reasons why we're going to blow through 3,000 in this video, before we get to that, let me ask you a question. How long did it take for gold to go from $1,000 an ounce in American dollars to $2,000 an ounce? Think about your guess. It was 10 years and 4 months. Now, I know we're not at 3,000 yet, but close enough. Last I checked, gold was $2,920 or something. And we hit all-time highs in every single fiat currency around the world recently. And it's going to just keep on continuing as currencies worldwide just become less valuable because they keep creating more of it. But to get from 2,000 to what I'll call close enough to 3,000, remember, from 1 to 2, it took 10 years and 4 months. From 2 to close to 3, that took about a year and a half. You can see the acceleration time increasing. This is a big part of what I'm telling you about everything right now. All the acceleration is increasing. But to go from 3,000, we blow through it soon, to go to 4,000, I believe that amount of time will be less than what it took to go from 2 to 3, which was a year and a half or so. It'll be under a year to get from 3,000 when we break through to 4,000. And nobody's telling you about this. They're all giving you pie in the sky numbers. Maybe it'll get to 10, maybe it'll get to 20. Granted, sure. I'm saying to go from 3 to 4 will take less than 1 year. So let's get into all the details about why I'm telling you the gold prices are just going to blow through 3,000 and they're going to go to 4,000 pretty quickly. And there's all sorts of ramifications of that. It's also a statement of the deterioration of fiat currency. So it's not necessarily a good thing, but everything right now all at once, and I'll tell you all of them, are all pushing for gold prices to go dramatically higher pretty soon. And I take a little bit of a victory lap that I've been talking about this since gold was at $1,600 an ounce. And I've been telling you to buy it, to buy it, to buy it up until now. And you can go back and watch all my videos about it. I've had my eye on this ball. People are coming around now saying, oh, it's central bank buying. They don't know. They're just talking about stuff that they feel like they have to talk about. That's why you see guys on the internet talking about, oh, buy XRP, buy Soldano. They don't really know. They're just feeling like they have to make a mention of what they think's better or not, but they don't know. And for all my less experienced investors, we'll start easy with supply and demand. Q4 central bank buying compared to previous periods. Central bank's insatiable appetite for gold reached a significant milestone in 2024. Having added 712 tons in the first 3 quarters of the year, central banks bought a further 333 tons in Q4 to bring the net annual total to 1,045 tons. And as I tell you, this trend is only accelerating. We're going to get into it a bit, but there's more countries that never bought gold before that are buying gold. So many countries repatriating, but we'll get to that in a second too. And I'm going to tell you 5 actionable steps you can take right now to beat inflation and help yourself in this difficult economic time that's coming up. Land on your feet, help the people you care about. 5 steps, simple steps for new investors who want to get back on their feet. But first we're going to talk about why gold prices are going to do exactly what I've been telling you they're going to do for decades. Here's a chart from Statista. Total demand from central banks worldwide in gold from the first quarter of 2010 to the fourth quarter of 2024. Let me know if you see any kind of trend in there. And I also talk about the breadth of nations that are buying gold. Here's Q4 2024 reserves by country. This is from gold.org. And a lot of the countries you're going to be seeing on this chart, there's many of them that never have bought gold before. Some of them have, but now they're stepping it up. Other countries are coming along and buying gold for the first time. And the ones that you know about, China, India, Russia, they're all gluttonous in the way that they're absorbing gold in every possible way. China is the top producer of gold, digging it up from the ground. They're also the #1 importer of gold. Their population is going crazy buying gold because they understand what's going on with the global currencies. And the other big thing that's going on right now that is sort of new, but in the last few years it began, it's really picking up steam, is all these gold repatriations. So many countries are getting gold back from Switzerland, from England, from America even. And I'm going to talk about a lot of these countries. Driven by a combination of geopolitical, economic, and strategic factors that underscore the significance of gold as a vital component of national reserves. That's the reason they give for repatriating their gold. And it's all the stuff I've been talking about. The significance of gold as a vital component of national reserves. It is nature's insurance. It's the thing that stabilizes things. It is actual real money. Currency is currency. Dollars in your wallet is currency. Gold is actual money, and it's recognized by over 120 countries worldwide. You take an ounce of gold to Siberia, take an ounce of gold to Denmark, to Laos, to Peru, it's still got value. You can trade it in for the currency of the realm. And that was a question I got the other day. Well, what do we do with all this gold? I'm not going to buy a loaf of bread with a coin of gold that's worth $4,000, $3,000. You don't buy it with the gold. You transfer the gold into whatever country, into whatever currency you want, because everybody recognizes gold. So you go to America, trade in your gold if you want. There's lots of places to sell it. You get $3,000, walk around and buy as much bread as you want. The 2024 Central Bank Gold Reserve Study highlights several key reasons for this shift. Geopolitical tensions, economic stability, diversification of reserves, public trust and sovereignty, strategic asset management. You get it? All of this stuff. It's all one thing. Gold is money. You want to grab onto it and hold a piece of it because then you have some money. And they say strategic reserves and public confidence, sure, whatever. But the point is, nations now recognize and are remembering. What I talked about is how people forgot about what gold is about and what it's the point of it. People are now remembering that. Nations are remembering that, and they're taking action. And you're seeing it in the numbers. The survey conducted by the World Gold Council revealed that a significant proportion of central banks plan to increase their gold holdings over the next 12 months, reflecting a growing trend towards the strategic accumulation and repatriation of gold reserves. This trend is particularly pronounced among emerging market and developing nation economies, which have been the primary drivers of gold purchases since the 2008 global financial crisis. That's not something to be ignored. It was 2008, and a couple of things happened. The global financial crisis, and then also soon after we've had sanctions against Russia, a few other countries, and a lot of nations are trying to avoid the sanctions imposed upon them by the Americans. And also the global financial crisis, everyone's looking to America to be the leader, but then we have stuff like that happen. It kind of freaks them out. There's so many reasons, and there's actually active steps being taken by the BRICS nations, led by China, to actually get out from underneath the power of the American dollar. So in terms of repatriation, and listen to some of this, Germany got 674 tons of gold from New York and Paris, brought it back to Germany. And they say the reason is to build public trust and ensure the physical availability of the reserves. And I'm going to show you in each of these countries, and we'll go really quickly, but I'm going to show you each reason for collecting gold. It doesn't matter. It's gobbledygook. They're saying a couple of words that sound good because they all are just trying to get their gold back because they recognize the value in gold now. They're saying, well, why is another country holding it for us? That's what the repatriation is. And when Germany did all that, 2013 to 2017, in 2014, the Netherlands got back 122 tons, Austria got 110 tons, Turkey 220, Poland 100, Venezuela 160. This is all tons, okay? A ton of gold. Not an ounce, a ton. Now Kazakhstan, now listen to these ones that are very notable. I mean Belgium, Slovakia, Serbia, Philippines. But listen to Russia. From 2014 to 2021, they increased their domestic gold holdings, and they did not provide details of the repatriation amounts. That's notable because who else is the same is China. They're repatriating gold and they're buying gold and they're not letting anybody know. And they're mining gold, they're not letting those numbers out. There's a reason for this. They're just collecting gold. Nobody actually knows how much gold China has right now. And the only ones who know, I guess, are the ruling party. But there's a reason why they're being so quiet about it. Since 2015, China has been repatriating gold. Significant increases in domestic gold holdings Repatriation details not specified. And the reason given is diversification of reserves and reduction of dependence on the US dollar. India, ongoing from 2018 till now, is repatriating gold. And Mexico, Thailand, Italy, so many countries are all recognizing at once the value of gold. They're bringing it back. Why would you want your gold being held by another country? Why not hold it yourself? And don't forget, before we get into the performance of gold and the BRICS nations, I want to remind you that I'm going to give you 5 simple action steps you can take right now to get on top of inflation and survive this economic meltdown that we're about to face and land on your feet, help the people you care about. That's what we do here. And gold has been the best performing asset class of anything. Here's a chart of the best performers in 2025. This is from Capital Speculator, showing you the total returns of gold. And you're going to want to notice that gold actually outperformed so far this year, in the last month, every month, the entire way. The only time there's anything that outperformed gold was a year ago. The stock market, which was inflating a massive bubble, outperformed gold by a little bit. And when gold performs, what should happen, which has not happened yet, is that gold mining stocks should really respond to that and have their profit margins explode, and then they go up in price a lot. So if gold goes up 10%, the mining stocks go up 100%. But listen to this. The reason that gold is not part of this big bubble that was inflated in the stock market last year and actually outperformed gold is because that's the bubble. Gold is not part of the bubble. Cryptocurrencies are part of the bubble. Real estate is part of the bubble. Stocks for sure. Gold is gold is gold. It hasn't changed. Things are just inflating and deflating around it. And if you look at cryptocurrencies lately, there's a lot of people realizing that they don't know what they're talking about. They're swimming naked. The tide's gone out now. Cryptocurrencies overall are just looking really tired right now. People even talking about them don't have any legitimate, articulate reasons why they'll increase or decrease. They're just talking and naming different types of coins. Anything that's a zero-sum game and anything that has unlimited production ability, you can just make more and more coins, has zero value. There's actually no way to get any kind of value out of something that's a zero-sum game that has unlimited production capacity. That's why I like Bitcoin and I don't like most altcoins. But we're having a big speculative awakening now where gold, for retail investors like you and I, we're starting to realize that, oh my gosh, you can make money quickly in this big, tired, dusty, boring asset that people have disparaged for so long. I told you for the whole way, people forget what gold is about, the value of it, the purpose of it. The point isn't for it to increase in price. The point of it is to stay exactly where it is, at the price it's at, which is the price of gold. Gold is gold is gold. It never increases or decreases. It just sits there and other assets move around it. And what you're seeing now is a bunch of other assets declining in value in comparison to gold. But the biggest driver for gold buying right now is the BRICS nations, which is, the top 5. Now there's a whole bunch of them. I think they represent about 40%, 50% of the entire world's population right now, but they have more members that are on the wings waiting to come in. This is a map from the European Parliament, map of all the BRICS nations. And I'll show you a couple other things from European Parliament. GDP compared the G7 to the BRICS nations. Here's all the members of the BRICS nations. And here's a comparison of trade goods against G7 versus BRICS. And I'm telling you, people give a quick reason, like they say, well, it'll never usurp the American dollar, or there's this reason or that reason why you don't have to worry about it. But you do have to worry about it. It is a real thing, and it's already begun, and they're already trading oil and gold and other commodities using something they call the unit, which is a gold-backed trading currency that they're using. And eventually they're going to unleash the retail level of the BRICS currency, which is partially backed by gold, making it a superior currency to every single fiat currency on the earth, which is all of them. Plus, uncertainty is the number one thing that's bad for stocks, and as stocks fall, people are going to look to stability and safety, things like gold. With all this tariffs and the confusion around it right now, the uncertainty, that is going to lead us to a quicker and stronger recession than we otherwise would have had. But I want to make a point of saying that the recession would have happened regardless, no matter who the president was. This recession, I was watching the news the other day and they're talking about, could we have a recession? Will we have a recession? 100%. I will stake my career and my life on the fact that we're going to have a recession. It's a matter of when do we have it. I think we're going to have it very soon. I thought that we would have already had it a year ago. I think we're already maybe in one right now. But it doesn't matter. It's the one thing I keep telling you. The recession will be here when it gets here. It'll be here soon. It'll be pretty vicious. An economy is like lungs. I always tell you that. You breathe in, you breathe out. You can't not breathe out. Just know that you're going to want to always own some gold, especially when times get chaotic in terms of military events. And I'll show you some points showing you why else gold's going to do well because of the crumbling economy. This is an unemployment report that came out recently. They missed expectations. And now this week we're going to be talking about another debt ceiling debate, which is just more of the same. And they act like, what should we do? And I put up my hand and I say, why don't you just do the same thing you've done every single time since the beginning of the debt ceiling until now? Which is what they're going to do. But they got to pretend like they're not so they can justify their income because they're not even needed at all. We've got plenty of other bad economic reports in terms of the balance of trade, in terms of the amount of money required just to pay the carrying costs on our federal debt, which is over $1 trillion now. And here's the Atlanta Fed's GDP estimate for Q1 2025. That is one of the ugliest charts I've ever seen. And it encapsulates perfectly what I feel like we're about to walk into. And I know some of you agree with me. I know some of you know that I'm right. Some of you don't. I would suggest that people who don't agree with me, that's fine, but also look into it yourself and prepare in case, because this really is going to be happening in a way that no one's expecting because it's never been so ugly so suddenly. Everything's been great for 15 years. The bubble is inflated and inflated. But the whole time what was going on, 15 years, central banks were net buyers of gold. That's the smart money. And there's a shortfall in gold production. All the best gold finds and the highest grade finds have been exploited, identified, developed. That's why I've been telling you for over a decade now that it's cheaper, less expensive for a big gold mining company to buy an undeveloped gold mine where maybe they don't have enough money to make it happen. They just come along and buy gold that's already been found, needs to be developed, dug out of the ground. That's less expensive than searching for gold yourself. That's why there will be a lot of takeovers and absorption and mergers in the industry as gold prices continue to climb. And the biggest driver for gold prices is the deterioration of the US dollar. And it is deteriorating so fast, and they're going to be printing a whole bunch more. They're going to have to. It's a really high likelihood that they're going to do another bout of quantitative easing. They're going to create new money. That's just like liquidating a stock. You're just making more dollars. So that means that each dollar is worth a little bit less. That's why we lost almost all the purchasing power of the dollar since the formation of the Federal Reserve, which also is not required at all. Completely unnecessary. Every penny we pay for them, there's zero need for any Federal Reserve at all. They tell you they're so important, but they're not so important. There's a thing called market discovery, capitalism, that always works. Everything else, any kind of artificial manipulation, never works. You can't control interest rates. You should let them decide their own level in the open markets. That's why I always tell you, there's interest rates that they control, but then there's market discovery interest rates where interest rates go up on their own because of the reactions of the traders. Plus, we're going to have lower interest rates, which will be tremendously good for gold prices. And there's a lot of push for lower interest rates among the president and his team. So it's almost certain that it's going to happen. And the big one, the big elephant in the room, is the possible revaluation of gold, which would be logical and very beneficial to the American balance sheet. I do not know if they're going to do it or not. And don't worry about if they check if the gold's in Fort Knox or not. Even the gold that is there is owed to other countries. So how much gold is there? Even the gold you find is not actually owned by America. Some of it. These are some of the reasons, and there are others. There are some of the reasons why gold's going to scream through 3,000 and well to 4,000 in under a year, in my opinion. So great, that'll be fun to watch. But what do you do about it? You might ask, Peter, what am I going to do about all this? Because there's so much economic insecurity right now. People are talking around their dinner tables about how they're going to pay their bills. There's inflation. Things are getting worse. And now we're just rolling into a recession, chaotic time, which always is bolstering to the value of gold because people reach for safety, they want security, they want stability. So here's my 5 non-advice actionable steps. I say, first of all, avoid everything. I've been telling you for ages, get out of the Magnificent Seven for sure. Get out of all cryptocurrencies for sure. Not forever, for right now. Bitcoin will have a place until we're long gone from this world. It will never go away. But it will have a correction first. And when it hits a capitulation point, like anything I tell you, the best time to buy anything is a capitulation point. Baby's going out with the bathwater, then load up. But we're not even close to that point yet. And this recession's about to roll into town. Like I said, sooner and stronger because of the tariffs and all the uncertainty. While the unemployment rate goes to double digits, as I told you about in the last video. But for a long time, I've been saying get out of the Magnificent Seven, all these speculative stocks, these big name companies you see on the news that they're talking about. Avoid all of that. But you don't avoid everything. There's the one thing you don't avoid is silver and gold mining stocks that are not going to go out of business because I've looked into them. The Peter Leeds approved gold and silver mining stocks. Silver prices is a no-brainer. Gold prices will continue to climb. Silver prices will climb faster. The silver to gold ratio is something like 80, 85. It should be closer to 40. If silver doubled in price and gold stayed flat, that would be a return to a healthier silver to gold ratio. But you want to be invested and you want to be involved with a lot of these Peter Leeds approved gold mining and silver mining companies that have passed 29-point Leeds analysis. You want to make sure that they have good liquidity, they don't have too much debt, that their reserve still has 10 years of life at least left in it. They've got paved roads to the ocean to get all the gold to China. You've got a workforce, agreements with the First Nations groups. So much goes into a gold mine. So many gold mines and silver mines go out of business. The actual majority. Just like biotech companies. Most of them go out of business. People don't know that. You have to be very careful with gold mining and silver mining companies that you get something that has the right kind of setup so that you're going to be able to help your grandkids buy a mansion one day. I also say number 3, still keep identifying opportunities. There's a lot of opportunities in things like oil and gas right now. So don't close your ears. Some people will invest in Bitcoin and just wait for that to make them rich and then they don't do anything else. Stop thinking that way. Look for opportunities always in every moment, especially in the chaotic times. That's when you get the best opportunities. One of them I'm looking at is around oil, but I'll tell you if you're a subscriber to the peterleeds.com newsletter, I'll tell you all about it, but I'm just still looking at it. It's not yet, not time to buy yet. And I say definitely, and everyone can do this, buy some physical silver. Maybe gold's too expensive. I'd say buy gold too, but just make sure to get 4 nines pure, 99.99% pure silver. Same with gold. And there's a lot of reputable dealers just online that you can buy from, or your bank, or gold dealers. You can get it just about anywhere. If you really want to get some silver, you'll get some silver. I suggest buying a monster box. It's 500 silver coins. Make sure they're pure. Just stuff it away in your closet. Don't tell anybody about it. One day, it's going to definitely be worth a lot more than you paid for it. And it'll be useful in terms of barter when people have less and less confidence in fiat currencies. But number 5, the 5th thing that I suggest you do is trust in the process. Investing well, I tell you, is very boring and it's frustrating and you'll want to get rich really quickly and so you'll buy stupid stuff that makes you lose money real quickly. But just invest well in actual real money, which is gold, and then don't do anything. What could be easier? You just have to wait. And that's the hardest part, having the stoicism to just wait until. I've been right the whole way. I'm not going to be wrong now. You just have to wait for everything I'm telling you is going to play out to play out. And if you want to keep on top of all of this with me, benefit yourself from an investment perspective to understand what's really going on, I'm asking you to consider becoming a Peter Leeds insider. All these videos are driven by the support we get from Peter Leeds insiders. There's all sorts of bonuses that come with it. You can learn about it and the world famous stock pick newsletter we have. All of this stuff is available at peterleeds.com so that you can find the one that's best for you to get you on your feet, help the ones you care about, and make some money from this chaotic time that everybody else is going to be losing money.